Thanks, everybody. And officially, good morning. Happy Sunday. Welcome to Market Watch Group Sunday Market Insights. My name is Scott. I will be your host. I will be your friend. Disclaimers, as always, please keep in mind that what we do is for education, illustrative purposes only. Nothing we do or say should be construed or interpreted as a recommendation to buy or sell any security, because we are not brokers, we're not advisors, we're just speculators working together. Blades of grass binding together against the lawnmower. We can do it. Believe in us. What are we going to do today? Let's posture, obviously. Let's look at the economic calendar. We've got a heavy load at the end of the week. So we're just going to be watching and processing. And then I would say that the way that I interpret it, and I would love anyone who's, reading about this, thinking about this, or, anything along those lines, weigh in with your opinion. For me, the prospects of a rate cut require 2 subsequent months of downward numbers. And so, one of the things that we're going to see is on the calendar this week is PCE, which is the Fed's favored of the 3 core inflationary measures. And so for me, it's not just like, if it's stalled, if we have one good month, then I think July is on the table, right? We have May, then we can have June, and then July it can happen. That's where I see it. Powell's come out as very disciplined in being data driven in the Fed's decisioning, right? In their decision making. And so I think it's going to take 2. So I want to hear from everybody else. So that puts me at best in July. Kami says joining just in time. No, you missed the disclaimers. That's the best part. The disclaimers. It's good to see you, though, my friend. So, let's look at the economic calendar. Sector searching. It's really more sector identification for searching. We really push searching to our working sessions now. I should probably adapt my slides as such, but certainly I feel like, does industrials warrant a closer look? As we know the dust is settling, we should definitely go from there. So you missed the monologue. Kami, you missed the opening monologue. So you basically missed everything. Funny. Press. Okay. I like watching the X's for tell me if you're seeing anything of note. And just side note, I was watching a commentator who was talking about like Twitter to tweets. And he said, now that it's X, I call them excrements. He's like, I don't know if that's right or wrong. I thought that was pretty funny. So it's a little long, but definitely catchy. Watch list maintenance. Yeah, we've been cleaning up. Today, what I think I might do, and you won't miss anything too important, Melody. So I'm glad you're dialing in exactly the technology best for you. Today, what we'll do is, as we go through the watch list, we'll just put some things on the chopping block. And just be like, do we want to keep watching this? And if we get, the rules. If 3 people vote something, that's it. Bam, that's it. 1, 2, 3, 10. It's done. We don't play around. We don't wait for like a majority. Nah. No, we put something on the table, and if 3 produce a quorum, it's done. And I agree, Sandy. The female energy is everything. So, yay indeed. All right, let's get going. Let's get going. Oh, trading plan. Yes, we're on to routines. We are what we repeatedly do. Excellence, therefore, is a habit. Some Greek person said that at some point. Good stuff. All right. Let's go. What am I looking for here? I'm looking for the posture. And let's just copy and insert and make this 525. I do have so much fun. I gotta tell you, like, I really have so much fun. My kids, like, sometimes walk by and they're like, "Are you giggling to yourself in there?" And I'm like, "I promise, at least I think we're all laughing to some extent, but maybe not. Maybe it's just me." Okay. Let's do 525. That's today. Long term first. Let's crack. Let's get into it. Steve C's laughing with me. There's at least 2 of us. Okay, no change. That's that fast, right? And I hope you see that as you get into this, where it's not like we come in and we're like, all right, let's start from the beginning and see. At a certain point, we sort of come in and we know what we're starting from. We know what we're looking for. We know what marks are going to indicate enough strength to raise our score, or what concerns we would have if it drops back. Right now, it dropping back, it's not like we were expecting that. We're not surprised that at this point it's starting. It's now coming off of its V strength here, right? And so the question we have is it going to pull back only into this little? You can see I'm going to take this little hiccup range right here. Interestingly, that little hiccup range right there, that's where our posture hit 2.5, right? Kind of got stalled. We had broken down, but it hadn't really gotten nasty yet. So that to me is important contextually as price action. Now as we come back out of what bottomed below that. Does that make sense? I hope that came out the way I intended it to. So now as we see this thing pulling back, does it flag? Are there flags on the long term? Of course there are. Any pattern, any type of technical analysis concept applies to whatever chart you're looking at. That's what's one of its strengths when you are talking about methodologies for analysis and looking at technicals versus something like, say, fundamentals. So for me, looking at this, I think, yeah, that's actually the first thing I would be looking for and would strengthen my score. No matter what, the score will increase when that's our last low. So unless from here, I'm going to change colors just so I can back out of it quickly. If from here we just drop all the way back down to this and have a double bottom, I don't know, something crazy happened. That would look like a bit of a shitstorm, and we'd be like, whoa, what's going on here? Certainly not putting, our score would be getting hurt in other ways, probably from volume, probably from the short term, probably from the VIX. That's that. I mean, there's really no this is what we think might happen next. No, I don't think any of us think that. For me, I think even if I'm going to put let's just kind of cut this. You'll notice I'm going to cut that red in half, the other red and the white all in half. And I'm going to be right at the top of that one funky big white candle, right? That's where I think Now here's what's interesting. People that love Fibonacci's, they love it because they're like, oh well, it's going to hit one of my lines. I'm doing the same kind of a thing here, right? I've got lines where I'm thinking, we could have a real quick flag there, still a flag a little deeper. That would be the bottom line for me. If it pulled all the way back to here, would I still be bullish? Yeah, it's a higher low. But what I would say is, if this one happened, I would be thinking plus 0.25. And if one of these flags happened, I would be thinking plus 0.5. So right now, as I'm waiting for what this consolidation on the weekly looks like, I'm starting to evaluate proactively, how am I likely to score that based on what comes next? And in the back of my mind, I'm a little bit concerned that, are we going to get a couple of weeks of pullback? So, yeah, I think we're all kind of there. Miguel's not here. Anyone else with some hedges or thinking about hedges, let me know. Or if you just sort of dialed back your bullish trading enough, booking gains and tightening stops, that if this is what happens, okay, we can sustain it, right? But thinking even with now, let's look at a couple of things. Can it be just one pullback and then go? Yes. That's the proof right there. That out of this, we could get green and it could just go. So it's not like we're thinking, oh, there's no way this thing can go up from here. Of course it could go up from here. Anything could happen. So of course it could. We can find very easily where it just has 1 week. And that was also coming out of a kind of a deep, right? So that's important context to note. That was coming out of a consolidation. That was as the posture was improving quite strongly. So I don't want you to look at this, and this is what I see people do a lot. They look at this and they look at the stochastics. We don't talk about the stochastics when we score the trend. If you would have talked about the stochastics there, guess what? It was overbought and stayed overbought for that entire magnificent bull run. We did quite well. We actually weren't doing alerts, but we were building and putting up to a trend. I mean, if anyone was there, if you remember, that was a great time, And so what happens, I see, is people will get this bias. They're like, oh, I looked at the long term and, it's overbought and it looks like we're due for a couple of weeks of pullback. So and they take their foot off the gas, sort of, look to the side, and all of a sudden it goes. So I want to stress this. Could we see something like this where it's 3 weeks and then we get our next nice move set up? Yep. Or could it be where it was that 1 week and now things are ready to go again? Yep. Let's be ready for both. That's my thought. No need to close down, right? I tell people all the time, if you want to be right, have more than one idea of what might happen. Okay. Questions, comments, concerns, let me know. But for now, it's unchanged. But at this point, it's going to be a pretty easy analysis over the next few weeks. We know what we're looking for. We know what we're thinking's happening. If it all of a sudden turns to a bullish again, we're going to call that a flag and we're going to raise our score. So whatever happens, if the bulls come, we're ready to give them credit for it. Right now, it was a pullback, a consolidation. So obviously, there's no change. Would I consider GDX a hedge? I wouldn't consider it a hedge, but I would consider it a defensive position, which is kind of like balance in the middle, right? A hedge is going to be a little bit more aggressively bearish, where we can see gold and the markets move the same way for periods of time, not necessarily inversely. That's a great question. And we do talk about things like that, right? Where we'll do like a utilities trade. It's not really a hedge, but it is defensive. So it's just kind of like a concerned market balance position, which is just, it makes good sense, I think. So yeah, good question. Okay. Let's go down to 6 months. I got to tell you, I look at this and I think things look pretty good. At this point, we're starting to have a draw a trend ability. Starting to have highs and lows. Don't know if I have one here yet or not, but that's a pretty good looking short-term trend. Right? If you started to kind of hit that as a score. I don't think we're there yet because we haven't bounced off this bottom. However, I'm at a 1 right now. That's stronger than a 1 when it's fully dialed in. 1, 2, 3, 4, 5. No, I'm not going to do anything. I'm going to leave it as a 1 for now because we could, from here, we could drop all the way back to this and then it would completely change the alignment of that. So this is an illusion still because that question mark. If it catches that, I'd give it a quick 0.5 point. And then when it broke through this, I would, let it go on up and then we'd be at a 2. So I know what it will take for that to continue getting stronger. But for right now, 1, 2, 3, 4, 5. It doesn't make sense for us if it hasn't turned up yet to score a pullback during the week. That's not bullish. It's not bullish unless now if it does this, you can see if it does this and it does this, well then everything changes and we're thinking, buyers, welcome back. Now we can. And that would support the bull flag on the long-term chart. Okay, so far, it's a lot of me prattling on and no change in the score. But let's get to the volume. Because here's what's interesting. Volume will change, I believe, but not positively. Okay. I've got buyers. This was close. Wouldn't have scored. Actually, I think no, it wasn't. But it didn't go high enough. It's a white candle. People are like, oh, that's buyers. But it gapped down, ran up, barely got further. That's definitely sellers. And this one, above average volume, but it finished where it started. So that's a tie. And this is going to be an interesting one here. If you're new, especially, because this is where sometimes we get a little bit thrown off. This is a white candle, but a red day. What do I mean by that? Well, right? I still get thrown off, like even teaching it. I'm like, oh, hold on, I said that wrong. Let me go back, and then I have to like reorganize it. It's a funny thing. A white candle means it opened here at the bottom, closed here at the top. That's just software configuration. You can actually change the way that that candles get constructed and things, but open, close, that's the high. That's the low, that little teeny little guy down there. And that's the candle construction, which means that it closed higher than it opened. But when we say something was up or down, we don't mean from its open. We mean from its previous close. So like when we're like, the Dow is up today, they don't mean it's up from the time that it opened. They mean that it's up from yesterday's close, right? That's our orientation. That's our watermark. So our watermark, to go blue for watermark, is here. That's the close. Steven's saying this one. I wondered if that one, Steven. So I'll go look at that because I was curious about that one. However, it would be a tie, but we do want to mark it. So you're right. So we're looking at this close at 583.09. And then we closed at 579. So we dropped 4 points, which was a 0.7%. Our threshold unofficially is around 0.5. But I'll still really I would even maybe say 0.25. I'll say 0.5. That's unofficial. We'll still give it a little gray area around that. But it dropped 0.7 from the previous day. It started down 1.5, and it regained some. But overall, who won the day? Sellers. And so this will go here, and so will this. Steven says 63.9, 68.1 versus 68.9. 68.1 versus 63.9. 107.7. You had it at 892. I mean, I might have just rounded my numbers a little bit more, but that's indeed above. What's the threshold? 5%. 5%. Some people are like, oh, big volume, you need 150%. You're not going to see that hardly ever on the SPY. 5%. That's above average volume. So I agree. Let's put that in there. We are going to maintain our consistency. But who gets the day? Nope. Ties. It's a tie. And again, why a tie, Scott? That's a huge day. That's got to be the buyers. You've got to give it to the buyers. Someone's thinking that. I would have thought that. And the reason why is because we ended the previous day up here at 594. And then it gapped down to 587. Big old gap down. And then it spent the whole rest of the day fighting. And they fought. And they ultimately got here. So we ended at 570. No, we ended at, where's my close? 594. And then we ended at 595, a point higher. A point higher. That's a 0.2% advance. And aren't we glad? Like if you thought, oh, the buyers are so strong, then why was the next day an inside day and the next day a sell day? Part of the reason things were able to fall there is because of the fact that it was just like there was no volume left. It was just like they were just sputtering. Sputtering when? Sputtering after 1, 2, 3, 4, 5. And this was a huge pop. Like, bam, they broke, continued. Of course it's going to run out of steam. Of course it is. We're not surprised by that. So what are we doing in that situation? We're tightening stops, taking profits. There's nothing there surprised us, right? And even still, if I had a stop and this thing gapped down, what would I have done? I would have taken it off. And then at the end of the day, when it ran back up, I'd be like, oh man, maybe it's time to get out of here, right? Our strategies give us the opportunity to move through this, you guys. Hopefully you're seeing that. Like, not like, oh, look how smart we are. We're like, look, we're just trying to follow what the market, follow the lawnmower. That's it. That's it. Okay. Good. I know that. So hopefully that was both some candlestick context and volume / trend context. I mean, this is super important, I think, because it is a funky market. You know what I mean? Like, it's recovering, but is it? Okay. Let's see. Let me move this. It's supposed to be over here. I'm going to need that watch list. All right, let's go finish this. I'm going to have to speed up now that I took some time yapping about these things. Where are you? Okay, let's reload. Final volume score. Oh yeah, sorry, Steven. Um, 1, 2, 3, 4. 4 buyers. Now there's 2 sellers. I'm bringing mine back down to 0.5. Mine's dropped. What is fair value? When they talk about fair value, they're looking at parity expectations of futures, and not really. We don't care too much about fair value. We care about where is expectations of opening ranges. So when I look at the futures, what I'm looking at is where am I thinking things are about to open, and we have the ability to coordinate it, both the futures with, like, we can go look at the pre-market trading values of each individual stock we're in to kind of be like, hey, where am I in danger? I can go look and see, is this thing set to open down or up, or what's going on? So I'm mostly concerned with where's the open gonna put me once because you guys see it all the time, right? We open up and then we fall, we open down and then we run. The futures. So it's like somehow in our mind when we hear futures, we're Are we back? Sorry, I nudged it. 4 buyers, 2 sellers with a positive slope drops the score. Well, yes, because it's not that we have a 4-2-1. It's that we had a 4-1-1. Well, actually, we do it this way. So let me tell you. We went from a 1-4. No, sorry, that's wrong. We went from a 0-4-1, sellers, buyers, tie. That is equal to a what? 0.75. Yeah? Now, we are a 2. 1, 2, 3, 4, 5. Actually, no, we were actually an 0-4-0, and now we're a 2-4-2. So we went from 5 straight buy only. 4 only, I mean. So we had, this was only 4 buyers, and that was a 0.75, right? 0.75. And now we had 2 tie days, which were days that the buyers tried to do something, couldn't, and 2 sell days. Now, overwhelmingly, the buyers still are the highest. So I'm still scoring it favorably, but yes, that empirically looks worse, right? So now what you're misreading, Stephen, I'm not scoring it negatively. I'm scoring it lower than the previous week, right? My score is 0.5, but it dropped from 0.75 because this is empirically worse than this. Does that make sense? Let me know if that makes sense, everybody. Yes, I still have, here's my sanity check. But my sanity check is lower. My previous sanity check looked more like this. Because, right? And so it's like, was that a 0.75 and this is more of a 0.5? Yeah, I think so. That's where I am, 0.5. Okay. Okay. Bob's given a more clear, probably technical definition of fair value. Is that what you were doing? Opening price. Yeah. Okay. Yes, I think we're all on the same page. Let's hit the major market. Major market. It's a beautiful ad. I love it, of course, but let's get to business. Looky, looky. NASDAQ back on top. Russell still way, way down. Dow in third. Very quickly moved back into more of one of these bullish looking positions than when we dropped into this type of a position. That's a good start. Let's go to the 133. What do we have there? Not quite first. It's kind of tied with the S&P. This is in second. Russell looks horrible. I don't even know where we are. Let's orient first. What are we at here? We're at a 0. God, that feels like we're definitely going to be positive, doesn't it? It's the thing is, though, like the foundational score, we need to see the scoring score, the 66 day. And that's where things kind of got dicey. But you can see here. Yeah, I mean, I'm gonna because of the early strength, even though this is sort of like in a tie, I'm giving it a quarter of a point. I'm going positive at this point. The NASDAQ has done enough of a smash and grab to move back into a foundationally bullish place. And you know what? I could even say that maybe it's a tie. Let's go see what the 22 says. And if the NASDAQ is pushed up to the top, then we would go ahead and give it the nod. Oh, look what we have there. NASDAQ pushed to the top. Who led this little charge, this little bullish charge coming off this recent flirting with a bear market low? Technology. Great. Let's go give it, right? It's funny because we're seeing the strength here and we're seeing it on the longer terms. The only place it's not is on the 66. Okay, what does that mean? It means I'm going to go ahead and I'm going to move my score to a 0.25. And when I see it on the 66, it becomes a 0.5. That's as good as it gets. It can't be a 0.75 or a 1 without participation by the small caps. So as long as the Russell's in that nasty bottom position where it will be as long as this trade war and tariff problems and inflation persists, then I think a 0.5 is about as good as we're going to see. You want me to go back and look at that one more time on the 66? Let me do that for you. Ooh, it's not there. That's the point. It's not there. On the 66, it's popped pretty strongly, but it hasn't moved into a leading yet. When this gets above, bam, my score goes to a 0.5. Could be next week. That's all I'm waiting for. I feel like I've given it some credit for the other conditions. Give me your thoughts. Agree, disagree. Let me know if there's any questions about it. Okay. Boom. Let's go to sector rotation. Press, if you've seen anything enlightening in the exosphere, let me know. What do we have up top? Discretionary. Okay, interesting. Financials. Great. Communication services. And industrials. The only one missing is technology. Oh, look, technology. Very strong up here on this as we reemerge into what we hope becomes the next one of these upswings. These are the right candidates to do it from this perspective. That's a good, strong beginning. Sorry, let me actually go back for 1 second. Back to the 200. Who's down here? Healthcare. Energy. Materials. Staples. Those are all defensive and commodity oriented, not growth oriented components. We go to this though, and we've got utilities still sitting up here. We drop to the 133, and it's like, wait a second. It's a little bit. What are we coming in? What are we coming in at on this one? 0 on here as well. Okay, we're neutral. Whoa, what are you doing? Financials are near the top, but then also staples. So this is a much more of a mixed bag. Industrials hanging out near the top. You can see that technology's popped back up, as has discretionary. And we've got materials and healthcare and energy. Mixed bag. 66. Let's go. Who's starting to emerge? Industrials. Okay. And that's the sector I said maybe we should take a closer look. And this is confirming that for me. Confirming that. Industrials. I think I even saw a Caterpillar trade setting up, if I'm not mistaken. But maybe we should have more from that sector on our watch list. Utilities. We talked about it last time too, Press says. As he remembers that I have a poor memory from combined with ADD. Years and years of concussions and other things. Probably, I don't know. Yeah, I drank too much in college, didn't we all? Staples. Financials. Bob Walker knows what I'm talking about. Communication services. Okay, yeah. I mean, it just... Do we have enough? It looks pretty mixed, if nothing else. I agree. We have industrials at the top, and then the very next thing is utilities. And then the very next thing is staples. So it's like 1 growth, 2 defensive, then financials. Yeah. I'm gonna keep it at a 0. Yeah, it's gonna stay. I agree, Steven. Yeah, it's trying. It's trying. It's not really, and this is where. Whoops, let's go 22. If it was here, we would see it, I think. This is promising. This is promising, at least. If there was a tie, it would have gone to the buyers. It would have gone to the positive side. Technology at the top, discretionary at the top, industrials at the top. There's the market, communication services, and there's financials. This looks great. This is promising that we'll see it get a 1/4 point soon, but it's just not enough to move to our scoring cycle yet. So let's be patient. We're not trying to be bullish. We're trying to understand the market, and we would love it to be bullish. That's my thought. Okay. Where's the market on the Fed since we're here? Let's just take a quick peek. Let me reload this. We're about 3 weeks out from the June announcement. And you can see that nobody thinks June. It's always funny how optimistic people get. Now, July, I'm leaning against July, but Friday for me, and we'll go look at the economic calendar too. Friday for me is going to be a determinant. Yeah, right now it looks like September. I think I already moved myself to September actually, as I think about it. But the market's 3-1 against, and they're thinking July is now basically even odds in September because there's just not enough time to get multiple reads of data that are indicative of a decline in inflation to let the Fed do it. And there's not a risk in other areas as of now, right? We're not seeing it in the labor market. No, I just kind of jumped, Sandy. Sorry, that's the ADD. Just bear with me. I'll get there. Really don't have much. It seems like it. We really don't have a lot. Remember that tomorrow's closed and we're not meeting. Tomorrow morning gets pushed to Tuesday morning. Tomorrow evening got canceled. So don't forget that. I'll miss you guys. I'll be thinking about you. Friday is pretty big. We've got PCE spending, but you'll notice jobless claims, job reports. As long as this holds up, the Fed's going to feel like they're pretty well anchored to be patient. That's my opinion. If we start to see weakness in jobless claims in the labor market, then we might see the Fed start to accelerate without, because then they're moving from choking the economy versus allowing the factors that be. So okay, let's go do. So yeah, PCE. There's some other things, sentiment. Anyway, Friday's our big day. VIX, and then we'll hit the watch list. Trading plan, I may take 5 minutes extra today. We'll see. 5 minutes is not that much. No score. 1, 2, 3, 4, 5. So we got down to here. Last week we did what? We raised it 0.5 point. I'm yellow here. I'm going to take this off, though, because it starts to distract me. Because I was wondering if I should have been higher. And I'm wondering if I still might be. What are the big movers on the economic calendar? Really just the PCE on Friday, Bob Rowland. That's the major one. We're minor watching labor to see if it starts to weaken, and that might start to accelerate a don't choke the economy Fed strategy. But right now it's allowing them to be a disciplined until inflation comes down strategy, and that's where I think we are. So I think PCE is the big one that we're watching for, and jobless claims is kind of minor. As I look at this, the recovery, we got down as low as a 2. We got as low as -1, and we're back to a 0.25. -1. I'm going to leave it as is. What was our March 11 VIX? March 11. Oh, but March 11 was way up here, though, right? That seems higher, though. Maybe where we would be on the 3rd or the 19th. Let's just go look at that. That's a good idea. I'm open to that. What was it around that time? 0.75, 0.5, 0.25. I think 0.25 is actually pretty reasonable for right now. I'm going to leave mine where it is. If it starts to give me the lower high, I'll increase it there. Steven says he's going to put his at a 0.5. That's perfectly reasonable as well. We're very close. So I'm gonna go with that. That leaves me unchanged. That's kind of where I thought we would be, actually. I thought I said we'd maybe drop a quarter of a point or maybe go unchanged. So we dropped a quarter here on volume. Steven's score is 25.5. He is the most bullish person the world has ever known. No, I'm just kidding. I know it's not 25, Steven. Bob agrees with Steve and is putting his at a 0.5. Your score is a 0.25. Okay. 2.5. Who's more bullish than me? 2.5. Bob Rowland says that looks pretty reasonable. Bullish enough, we'd take some trades. Not so bullish that we're not going to be thinking about some hedges and things along those lines, right? Okay, let me get a pen. I need a note card for today's watch list. Let's get there. Feel like we're all kind of in the same place. Feels pretty good to have alignment in the group. Anybody real low? If you think you're the highest or the lowest, put your score out there. I'm curious. I'm super curious. Okay, let's get to the watch list. We'll go fast. Apple may have lost its standing for me. 2.5. Yeah, look at Apple. Ooh, it's kind of trying to hold this low, but I'm not putting Apple on my list this week. AbbVie, I still think AbbVie has prospects. Looking at a hiccup. Horrible news, right? That whole like tariff one company. That's a shit show for sure. AbbVie, Amazon. I still think Amazon has prospects, and we know that consumer discretionary. I'd like to see it not even fill the gap. I'd like to see it hold above the 50, right? If we can see it turn from here, and you can see even right there, it's close. If it closes, if we get above like 202.50, there's a good chance this thing puts an alert out, and we'll see if it can get back up into this like 220 range. APH on the list. A little bit of a pullback, big bearish or big, not engulfing, but kind of a quasi. Yeah, I got to go find what there's got to be a candle pattern for that one. I think it mimics a hammer in its implications. It's an interesting one. Same thing there. Bank of America on the list. Financials look great. You know, Morgan Stanley is just setting up for us. Caterpillar setting up for us. That's on industrials. I would say CIEN. The sellers had a chance. What did they do? Nothing. It's pulled back from 82 to 80. Nothing. CLS, that was back here. We missed it. We talked a little bit about it. CME, we're still in. Still going. I think I can. Who's still got a piece of CME? Let me know. CNP. I just don't like the way this one. I don't feel like that's a good looking hiccup. Press says I took it and ran. Well done. Profit is a profit. Profit is a profit. Cisco. Sandy and I are both looking for this, right, Sandy? Cisco, come on. Delta. Maybe Delta still. I'm putting it on the list. Consumer discretionary. It's still there. Look at our strong list already. We're barely into the E's. EA. No good. We all took our losses there, I would assume. Still in. Love it. Boo. Thank you, Steve. Thank you. Boo indeed. Are we going to continue watching it? Because as we said, it owes me some money. Yes, indeed. Yes, indeed. It owes me some money. I intend to collect that debt. Flex. Put it on the list. Damn, I feel like our watch list is pretty strong, though. We've done a good job of maintaining GEV. I feel super disappointed that we missed that one. Gold, I believe you guys are still in. I believe Glenn is still managing that with you. I would trade Google on a pop. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're at 10. We're at 10 stocks that we would put on the opportunity list, and we're in the G's. Goldman, what does that tell us? A, we're on the right track with a bullish overall. Now, are we like strongly bullish? We're at 2.5, slightly bullish posture. Our momentum is very strong, right? We've had great momentum. I think we're just bullish enough. Hilton. I'd still think about that one, but it's starting to, it's closed the gap. Still okay. Hood. Looking for a flag. God, I feel like the entire watch list is tradable right now. HWM was a bullish engulfing pattern. It's funny, right? IBM on the list. It's funny because we like had this pullback and like, I feel like everything looks good. Am I wrong? I don't like ICE for some reason. I don't know why. It is kind of a hiccup trade. Why don't I like it? I don't know, but I'm not putting it on. There's something about it I can't explain. MasterCard looks good. Large spreads, fair enough. Meta looks strong. God. And the third thing I was going to say is pat ourselves on the back. Our watch list is good, man. Capital One. Oh, let's look at Capital One. We'll go look at that. It's weird to look at our market outlook, be slightly bullish on our watch list. Yeah, we work to have a strong watch list, though, right? Like we work for this exact thing, man. That's part of, I think, I hope this maybe illustrates why it's so important that we do maintain watch list curation as an activity. We'll see. I think next week we could find ourselves in a good position here, watching these leaders lead. These are leaders. We're not finding obscure stocks. This is Morgan Stanley. This is Meta. This is Netflix, Microsoft, Nvidia. This is Google, Goldman Sachs, IBM. Right? Like our watch list is full of things that can pull the market with it. Impressive. You and I both think that, as my line clearly indicates. And as this 527, what do you mean 527? That's on Tuesday, Scott. You can't start creating alerts in the future. The hell I can't, says I. I don't know who that conversation was with. The wind. It's getting close. I'm ready for it to trigger on Tuesday for sure. Amen. Microsoft looks great. Sorry, I may need more than 5 minutes because the watch list is so good. Wait for Netflix to pull back a little more. Nvidia earnings, so I'm not putting it on because of earnings. It's coming out really soon, so be careful. Great. Let's put PLTR on instead. I can't remember the last time our opportunity list looked like this. We could go back and look, but I have to imagine it's prior to February, maybe the last time we had such a strong overall list. PM. Yeah, we talked about this as a defensive trade, and it worked out great. Did anyone pull the trigger on this? I can't remember if someone did. PayPal looks okay, but I've got plenty of financials. Roblox was a phenomenal trade. Phenomenal trade. I need it to pull back, but I am going to still keep it on the list. Roblox, Rivian, yes. Consumer discretionary. Look at that beautiful flag. These are $4 plus moves. This one was not as big. $3, then $4. So where's my target? 20. Why not? Rocket Lab. I'm starting to set up as well. I'm excited, you guys. Beautiful trade, Bob Walker. Well done, sir. RTX, back on the list. It was funky. It was all over the place around the earnings. And now what? Now we've waited for it to stabilize, and now it's doing exactly what we wanted. SE, still pretty strong. I'm not sure a trade will show up. I'm running out of room on my card. TPR, I don't know. I think we've got better. And I think that's the other one, consumer discretionary and industrials. That's searching on Tuesday. Consumer discretionary, I'm going to make a note. Industrials and consumer discretionary. That's our next search. If you want to do some searching with me, show up on Tuesday night. That should be exciting. Tesla. Put it on the list. I'm going to go with Rivian, though. TSM looks pretty good. Trust the process. Our market posture held at 2.5. These are setting up. What does that mean? If these are setting up, that means there's been a bunch of consolidation, and the market posture held in the midst of that consolidation. Now, could anything happen because we know what the administration and the news cycle looks like? Yes, anything could happen. What is Price and the institutions? What are they doing? What is that helping us to do? There's more stability here. I'm ready to trade more bullishly. I'm not a 5. I'm a 2.5. But I'm a 2.5, and I've come from. We go back and we look at times when the market moves into sustained periods out of corrections and or bear markets. We still believe there's plenty of powder in the keg, particularly because of the strong labor market. So I feel like this all adds up. Tell me if you agree or disagree. Visa, put it on the list. We're still not done here. And Walmart. Nope. No reason. You might be like, well, Scott, it looks like it could bounce. Well, it does, but it just had a lower high than this one. I'm not interested. We have plenty of strength. Earnings season was strong, right? We haven't seen any corporate diminishment. Press, great comment. Thank you for that. What's the total number? I'm counting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 27, 28, 28. North of 20, man, it's strong. Yes. Let's still make sure we pick the best ones. The best ones, right? We're going to have to be discriminate coming through this, making sure we don't overload any one sector, things along those lines. So those are the concerns. I mean, these are better concerns. Right? Better concerns to have than some that we had a month ago, 2 months ago. Uber, Bob said. Thank you, Bob. And then we'll go look at the trading plan. I've still got 2 minutes to be under my 5. Beautiful. Beautiful. I'm going to slap it on. Thanks. I'm going to slap it on both the Bain watch list and the setup watch list. Bob Walker throwing a little gold nugget out right at the end. Nope, Bob Rowland, sorry. That's why I put the last name on. Bob Rowland throwing out a gold nugget that Bob Walker and I appreciate. Okay. Quickly on the trading plan. You magnificent people. We are on... Oh, something happened here. Market posture. Oh, we're not on routines. What am I talking about? Routine section 5. Scott, geez, buddy. What's wrong with you? Get it together. Get it together, man. We are on section 3. Trading systems. And some people are like, well, why don't you call it rules? They are rules. These rules make up this system. Why is that important? Because when we go do our record keeping, in your trade log, this trade type right here. Nope. Mine actually is, this is wrong. I changed the market watch log. Where's the other log? Ah, shit. Hold on. Hold on. No, that's not what I wanted. Webinar slides. Sorry, guys. Sorry. Let me get the blank option log up. Back to systems. Because here on our trade logs, we have a column for system. And if you hover your mouse over it, it says, what does that mean? It means, what is the trading system or advisory service used to take the trade? So, for example, if you have some people subscribe to newsletters, even within the newsletter, they usually have like subtitles to their services. Be specific, because we can go back and we can be like, hey, does that service? You can go be like, I'm going to isolate the 15 trades I took from that service. And you can see just those. Are they profitable? And if at the end of those trades, you're like, oh my God, I'm down $500 after those 15 trades. You're going to be like, all right, I'm done with that guy, or at least with that trade. That's why we do systems. So if you trade bounces and breakouts, you want to be able to isolate and say, am I profitable with both bounces and breakouts? Because if you're break even on breakouts and you make money on bounces, you might decide, you know what, I'm just gonna pass on the breakouts and wait for the bounce. Or even you might find you're negative on one and positive on the other, and that means either A, you need to fix the one, or B, you need to stop doing it and focus on the one that's making money. But we can't have like 8 different ways that we trade and not be able to. If you want to improve it, you have to measure it. That's the point of what we're doing here, right? If you want to improve it, you have to be able to measure it, and we have to be able to be granular in that. And so here is where you would come in and say, this was a bounce trade, a continuation trade, a breakout trade. Maybe there's a new system you put together that you learned from YouTube, and you're like, this is a ride the crocodile strategy trade. I don't know, what the hell, whatever. Right? You can find a lot of different names for systems out there. I promise you that. But once we have what a system is, each system needs its entire construct fleshed out. What are you going to trade? What are the time frames? How are you going to determine risk and position sizing and things like that? What are your rules for getting in, for setting stops, for setting targets, for how you manage the trade, for your tactics, right? All the logistics of, right? All of that should be as developed as possible. And then you have a system, and then you play that system, and then you tweak it by the rules in order to make it better and better and better and better. Crocodile trade, the barracuda. No, there are some really interesting ones, right? Anyways, okay. That's what we're working on this week. What do you need? Just one. I believe that the best starting system is a bounce trade system. That entails an existing trend. The trend is already in place. It's already going up, and all you're doing is waiting. It goes back to the title of my book. Find a bull market, buy the dips. Starts with a trend. So what to buy or sell? Things that are uptrending. The only things that we're going to consider are or if it's downtrending, for bounces to the downside, right? And then you talk about the setup. What do I need? I need a pullback. I need it to be at support. I need it to start bouncing off support so I can put my stop below support. So I can put my target at the next resistance. So I can, right? And that's how when you look at the alerts, the vast majority of the time, those are bounce trades. Sometimes breakout, once or twice continuation. Mostly bounce trades. I just trade with a trend. That's what makes sense, right? So that's it. You should be on section 3. Make it happen. I apologize. I took 10 minutes instead of 5, but it's worth it. Let's get these trading plans better and better and better and better and better. They are a representation of you as a trader. Have a great day off tomorrow. Don't show up. No one will be here. But Tuesday morning, 9:15 a.m., we will be on 15 before the market opens. We'll watch it open together. Join me for that. Thank you, guys. Have a great rest of your day. And as always, happy trading.
Recording stopped.